Okay, now we get to get really pick Harris's brain in terms of get into the nitty gritty of all these different things. So I want to start as Kevin, and I want to talk about value stocks. And Harris, you're a big value believer, and obviously that's your style of investing. And I am also a little bit of a value buff, but one of the things is it's been a tough kind of decade for us value guys. And I want to ask you, do you think that we need the stock market to roll over before value stocks ever get a bid again?
Well, that's a tough one. I mean, it has been a tough decade for a lot of my friends. And I don't really know why it's been so tough. It just has. I think it's because most of the humans are just out of business and the money just keeps going to ETFs, and the ETFs keep buying, the stocks that go up every day. And the ones that go down just keep going down because all my friends keep getting liquidated and put out of business. I don't know if the stock market decline fixes that, though. Well, I mean, look, I'm a long, short value hedge fund. I don't know if you even want to call my species, but it's a clearly endangered species. And, I've done quite well and actually made a lot of money over the last couple of years, but it's been harder than I've ever seen it be.
Yeah, and
I
like you
really
had,
know
like David Einhorn. David Einhorn is a perfect example of somebody who was having difficulty, from Greenlight Investment, in terms of Greenlight Capital, in terms of trying to beat this market and investing in value stocks. And whenever I see kind of his struggles, it reminds me so much of the kind of 1999 hanging up the skates that Julian Robertson did at the peak of the dot-com bubble, where he just said, I don't get it anymore. The market makes no sense. And he closed his Tiger fund, and that proved to be the bottom in value stocks and the top in kind of growth stocks. And I worry that we need kind of some famous value investor to tap out before this kind of value kind of slow death finally kind of finishes.
Yeah, I don't really know how it fixes itself. I know it will, and I just don't know how. But what I've learned, and I've been investing for 20 years, is that if you buy really good companies, and I think value is a misnomer, much like growth, and a lot of these terminologies are misnomers. But if you buy good companies and you buy them at a fair price, even if they don't go up, at some point something good happens to you. Last year, I had a few companies get taken out at huge premiums. I had my largest position had two different people go hostile on it. You don't know what's going to solve the issue. You just know it's going to go up because, it's cheap. Today, and I know it's kind of morbid to talk about it, but a decently sized position of mine was up 25% because the CEO said he had cancer. I know it sounds gruesome, but I think people are thinking the company's now for sale. And
right.
You don't really know what's
going
to unlock the value. You don't want to wish cancer on anyone, but something eventually unlocks the value, always.
Right. And, speaking of value and maybe growth stocks, what do you think? I know you've been a big bear on Tesla. And we've been talking about it a little bit because he just keeps getting himself in the news and stuff. And we finally got a bad earnings out of Tesla in terms of the growth numbers are rolling over, and yet it really hasn't cracked. Like, we're still kind of sitting above that level that we've been watching, and it's been holding. I'm just wondering what your thoughts are. Is it just a matter of time?
Yeah, it's a matter of time. I just don't understand Tesla. He doesn't respect the SEC, and I don't understand him. I don't know how to explain it. It's this company where it's no longer a growth stock. They're comping negative. The cars are just not in demand. They've dropped pricing dramatically to move steel. It's basically at a break-even pricing margin before overheads. They're fully satiated in the U.S. They probably have a bit more delivery in Asia. Europe might have, a couple more weeks of latent demand. And then you're looking at just flow demand as opposed to backlog, and there's nothing left. They have 30,000 X cars in inventory. They don't know how to move. They are running out of cash. They can't raise new capital. Everything's going wrong here, and it's still a $50 billion market cap. There's
Do
just
you
no
think
price
if they rate?
discovery. I was talking to sorry.
Sorry, go ahead. I didn't mean to interrupt.
So I was talking to a very good friend of mine. I've talked to him a few times about this, and he's just saying the prices are all made up. I mean, why is Tesla today $275 versus $375 versus $7.50? It has no bearing anymore on valuations. You have a machine that says, "Oh, here's a level. We'll buy at the level," or you have some ETF like the Global Ponzi Fraud ETF that just has an allocation to Tesla, and every time some poor retiree drops $100 in the bucket, it has to buy more Tesla. And I just don't know what's driving this all. I just know that this is perpetual bid under certain stocks that tend to grow their revenues really rapidly, and this total disregard for anything else below the revenue line, just because Amazon was able to grow the revenues really fast, and then eventually they had profits. And I think people forget the fact that for most of that cycle, Amazon didn't lose much money. They lost money early on, but they kind of ran it break even. You didn't see it look like something like Lyft, or you didn't see it look like something like Tesla, where they nonstop lost money the whole part of the cycle. I mean, Tesla's had no competition for the better part of a decade in EVs, and they lost money. Now the competition's coming, and I assume they'll just lose more money. I just don't get it, though. And I own puts. I own long-dated puts. I don't try to think about what Musk's going to tweet tomorrow. I'm sure he'll, commit some more securities fraud. You can't really guess what he's not. Well, I mean, almost every day, he's changed his estimate for this year's deliveries and production like 15 times. I can't even keep track of what the official estimate is anymore. Like, I don't even know how they can litigate this case. You need the entire PowerPoint to keep track of the different metrics he's used. Like, he just makes it up as he goes, and no one holds him accountable. I just don't get it. And that's why I have long-dated puts. I assume that eventually this stuff will matter. And if it doesn't matter, I'll just buy another year worth of duration. Eventually I'm going to be right, and my puts pay off 7-1. So I can, do this for 7 years in a row before I'm losing money at it. And if he has to make this 7 more years, he needs like $50 billion US. Like, there's only so much VC money available to fund this thing.
Right. So listen, one of the other stories I think that you've written about is natural gas. And correct me if I'm wrong, but you're a little bit of a bull on natural gas. Is that right?
Yeah. So far I've been wrong. That happens. Sometimes early, sometimes wrong. My view is that if you look at what's happening in nat gas, you have a couple factors in play. To start with, conventional nat gas production is actually in decline rapidly. That's because below $3, no one makes money producing nat gas. Then you have the shale guys, the Marcellus guys, Haynesville. They're growing, but their rate of growth is slowed dramatically because they don't make money producing nat gas. They actually lose money on nat gas, and they make some of it back on NGLs. But effectively, they're not making much money. They're kind of treading water, breaking even, losing a bit, depending on what their hedge book looks like and how good their rocks are. And they've funded this for a while with debt, and the debt's cut off. And a lot of these companies have gone to the shareholders and said, we're going to live within our means, which to a lot of shareholders basically says we're not going to grow anymore, which is probably a good thing, actually, because to grow and not produce profits is kind of stupid. So where is all this nat gas coming from? Well, it's coming from byproduct oil, mainly shale. Now, when you look at the shale guys, a lot of the basins are slowing down. Shale uses a lot of funny accounting. And when you really start going deep into it, at high prices, say 70, 75, they don't make money. We had in Q3 2018, you had mid-60s, high 60s oil price. None of these guys have positive cash flow. They don't make money at anything in the realm of the current price deck. And I think eventually the capital is going to get cut off. It's already getting cut off. You're seeing PE guys stop funding. You're seeing credit spreads stay wide, despite the fact that oil's recovered. You've seen a lot of these guys in the Permian say they're going to slow their drilling. And so you're going to have less byproducts. You're still going to have byproducts, but the rate of increase in byproducts is going to slow. On the demand side, you have a lot of LNG. You have switching from coal to nat gas. I don't think that's ever going backwards. You can have exports to Mexico if the Mexicans ever get their act together and build the pipelines. I just think you're going to see more demand. You're going to see a reduction in the rate of growth of supply, and eventually it's going to normalize out where that gas is higher than today's price, because you can't have a commodity that is below the cost of production for too many years before you see a change. Going back to what I talked about with shipping, I always wait to see the inflection. This is all theoretical. I want to see this actually inflected into the price of the underlying. So we had a big price spike in Q3 and Q4 of this year, partly seasonal. You know, it was a very cold winter early on, partly because gas had been tight all summer. We're still below historic averages right now. We're below the 5-year averages. We're below all sorts of metrics. The expectation is that we will fill reserves this summer. I'm skeptical. But we saw a spike. I got excited. Probably a year early. Maybe I'm 2 years early. I don't know. But I have a position. A lot of these companies have spiked quite a bit from where I bought them. I've taken a little bit of it off. I've moved it around into the guys with a better balance sheet so I can see it out longer. But I have a position. It's a large position. I do think nat gas goes higher.
So the spike from this late early winter, that was the old optionsellers.com guy, the guy that blew himself up. He was short all sorts of vol. And we talked about that,
Yeah.
Patrick and I a couple of times. I think that was a case of, the VIX carry trade had kind of moved and morphed into the nat gas carry trade. And it was unbelievable, the kind of the violence of that spike. But it was actually even more shocking how quickly it was played out. Like it went from $3 to almost $5, right back down to $3. Before you could blink.
Down to $2.50.
It's kind of amazing. Yeah,
but,
$2.50.
But
or whatever.
Right.
So Harris, 1 second. Can you tell me what are the names? You mentioned you like ones with good balance sheet. This is my problem with anything nat gas related. If you're just trying to play the commodity, the shape of the curve makes it really tough to own it outright. And so finding a good company to own is often a better way to play it than the actual owning the commodity. And I was wondering which ones, you're more of a finance guy and going through the numbers. What are the names you like specifically on the companies?
Sure. Just going back to the option traders, optionsellers.com, he got himself caught in, a mess. But I think there was something going on in the weather patterns that was a precipitating factor. You always eventually, when something happens in finance, you always see someone eventually lose a lot of money. It's just inevitable, and that gas is super volatile. But I think it was a weather thing that led to the blow up. And, then you had a situation where the weather started getting very bearish and the nat gas price pulled back. In terms of names I like, my favorite position is Sandridge. They're a very large producer. Here's a funny story. Sandridge is a company where a guy named Tom Ward spent $12 billion putting holes in the ground. Along the way, he bought himself a lot of toys. He spent $100 million on his headquarters building, remodeling it. He built midstream gathering systems. He built, you name it, he built it. And it all went to money heaven. Like literally just money heaven. And people kept giving him capital, and he kept spending it. A lot of it he also took himself in salary and bonuses and other things, but $12 billion just disappeared. So it went into bankruptcy, and one of Ward's disciples took over and went on with the same tricks. And they're producing a whole lot of nat gas, but they're just wasting it all. So this really smart fella named Carl Icahn came along and said, this makes no sense. He got rid of the bad people. He put 5 of his guys on the board, so they have 5 out of the 8 seats. And he went in there and he said, let's cut costs, because Icahn's a cost cutter. They've dramatically cut costs. They've moved some assets around. They sold bad assets, added some good ones. They've decided to go spend some money on drilling. I'm not sure I'm a huge fan of spending new money on drilling, but it is what it is. But effectively, right now you have a company where after the cost cuts are all done, at today's commodity prices being $2.75 nat gas and call it $60 oil, I think you're looking at about $200 million of cash flow on a company with 225 million of market cap. Of that 225 million of market cap, you're looking at about 25 million of cash, and you're looking at the headquarters building being worth $100 million. And just talk about the headquarters building a little, because it's kind of funny. And I had some friends who know some real estate. They kind of appraised it at give or take $100 million. But they spent $100 million just renovating it about 10 years ago. They also spent, and I think I'm just about right, but they spent about $26 million on a Zen garden, where they bought a plot of land across the street and created a Zen garden. Well, I mean, if you have someone else's money, why not have a Zen garden? They bought a parking
Who doesn't have a Zen garden? I don't know about you. I have one.
They bought a fitness center across the way, which is now a Boys and Girls Club. They just spent money on anything they could spend money on. So all this stuff's sitting on the balance sheet. But when you rearrange the balance sheet, you take the 225 million market cap, strip away the 25 of cash, strip away the 100 million of headquarters building, you're paying about $100 million for 200 million of cash flow. And you're getting a midstream gathering system, which could probably be sold for some decent chunk of change. You're getting a bunch of other stuff on the balance sheet that we don't know about, injection wells and whatever else. And I mean, you're basically getting a lot of Mississippi lime wells that they're not, Miss Lime's not the best asset, especially at 275 net gas. It's a terrible asset. But the wells have already been drilled. They're low-ish cost to operate, not low, but low-ish. And they're producing a lot of net gas with a bit of oil. And that's just cash flow that's going to decline at some double-digit rate. It's going to decline for a while, but you have a lot of value there. You also have Northwest Stack, where someone else is drilling the wells for you. And then finally, you have some Colorado assets, which have turned out to be a lot better than expected. They're spending a lot of money drilling wells there. That's where the $200 million is going each year. In 2 years, we'll learn if that's smart or not. I would rather see them do a buyback, but hey, I'm not going to question the greatest capital allocator of all time, Carl Icahn. Let him do what he's going to do.
So Harris,
he's the largest shareholder, and I think he'll do something smart.
So Harris, I have to ask you: do you follow any Canadian nat gas storylines? Because I know Kevin is just itching to talk about in Canada. But do you have any Canadian names that you keep an eye on?
No, I don't. Sorry, I really don't.
So I got to tell Harris, why don't you own up about your kind of feeling about Canadian promoters? I think we've chatted about this in the past. It's okay. This is okay. You know what? I think the Vancouver boys will be proud of it when you tell them your opinion of them.
How do I say this nice? Well, I mean,
don't hold back.
I have a certain respect. Yeah. I have a certain respect for them. I mean, stealing money from U.S. hedge funds has got to be a large percentage of the entire Canadian GDP. Like, they are keeping the lights on in Canada. I've, in my career, lost a lot of money in Canadian small cap companies, particularly mining and resource. I think it's almost a rite of passage that you go to Vancouver, you get lucky once, and then you leave behind tens of millions of dollars.
You never make any money in Vancouver. It's just a loan.
I mean, at this point, they might as well just name one of the streets Cuppy Avenue.
Hey, by the way, we have some good pot stocks to sell you as well now, in case you're interested.
Were they lithium stocks last year?
Yeah, it was lithium last year, and now it's pot stocks because that's what they're all making fortunes on. You know, they did have a section where they were doing some Bitcoin mining as well, but this pot stock fad is well, I shouldn't call it a fad. This new emerging industry is kind of making all the mining guys completely give up. Looking for rocks in the ground and looking for plants to grow. Like it's kind of shocking the amount of speculation that is occurring there, and I think that eventually, there might be some fortunes made from this pot stocks, but I think when we look back, those are going to be a lot of people who feel like you do about the specific names and all kind of these promotes that are going on now.
There will be a great opportunity to short a lot of these pot frauds. I have a view of pot in that it's like the economics of growing celery, but with all the government regulation of an HMO. And it just sounds like a terrible business to be in. Right now, they're earning excess margin because there's no supply. In 2 or 3 years, it's going to be pretty much unlimited supply. And I think as capital keeps getting dumped into the sector, people will lose money for years and years and years. It'll just be a phenomenal short. It's not time yet, but it will be soon.
So what do you think will be the catalyst for, like, what are you looking for to kind of give you the confidence to step up and say, this is it, this is the time to lean into it?
Well, I want to make sure these things stop going up. You know, I'm not a short seller. It's not what I do. Tesla is my first short in a decade. The last short I had in a major way was Research in Motion. I was absolutely right about it. I was just a year early, and it just kept going up every damn day. And it didn't matter that Apple had a new phone, Google had a new phone. It just didn't matter. It didn't even matter when Research in Motion started comping negative as new products came. People just didn't care. It was very much like Tesla. And you just got to know that eventually it matters, but you got to wait till the stock stops going up. And I got to wait for the stock to stop going up, but I probably won't play cannabis. It's just, I don't like shorting. I mean, the problem with shorting is the most you can make is 100%. I hate options because my timing's pretty awful. And I'd much rather go buy something like Scorpio, where if I really do get this right, and I really think this company, I think product tanker rates could literally go to 100,000 a day, in which case you're looking at $5 billion a year of cash flow on less than $1 billion market cap. Like, I don't know how this thing's going to get priced, but I assume it's probably going to get priced at some growth multiple, in which case the company's will be trading at a couple times EV or a couple times market cap, value of the votes, the NAV. And, I think you can make 10, 20, 50 times your money. This management team, I actually invested in their last deal almost 20 years ago now, a company called OMI, and it was a 15 bagger in 18 months. And I also invested in a company called Frontline, which is similar industry in double hull tankers. And about 2 years after I invested, my quarterly dividend was more than I paid for the company.
Right.
So I've seen this happen before in tankers, and I'd much rather go look for those huge upside trades than try to guess when some cannabis fraud drops. It's too hard, and the upside's not good enough.
Well, actually, Kev,
go ahead,
I was just I have the chart up here of Scorpio, and one of the interesting observations I'll make technically is that we have seen it stop making lower lows now for the last 6 months. Like, if you look at the trend that this stock has been in, more or less for the last 2-3 years, it's basically been in a straight line down. And it's down like every month. It's making new lows, and really that stopped happening here. So there's some sort of either some value guys are supporting it, and it's starting to be accumulated. It hasn't broken out, but it stopped going down, and that might be a good sign for you.
Yeah, the stop going down is the first. It's the first step. So I don't usually buy stuff when it makes new lows. I did that with Nat Gas just because it was so cheap. But I want to see a bit of a stabilization. I want to see the business stabilize. I want to see whatever I'm tracking start actually doing well. Remember, when you're in some wacky subsector like product tankers, you don't have a lot of people following. This isn't like Apple where people are following tick by tick what's happening at some semi-fab somewhere, and they know exactly the order number within an hour of the PO being issued. Like, this is a company that no one really cares. So when the sector starts turning, you have time to make a decision. I had a very successful trade in dry bulkers about 2.5 years ago, and dry bulk rates went from all-time lows to, they bounced some. They bounced quite a bit, actually. And you had 3 months to do something about it before the stock started going up. And then the stock tripled in about 3 months, which was great for me. But you had quite a lot of time to actually look at it, research it, think about it. You didn't have to buy at the absolute lows. You could buy 10% off the lows, knowing that the theme was working out. And that's why I like these funny, unloved sectors. You can actually do all your research and know that things are going your direction and the shares don't respond yet. I mean, looking at this chart, it just looks like a bunch of up, down, but at least it's not all down.
So yeah, you know what, Patrick, Harris is more one of. Like, you have to understand one thing, Harris. Patrick loves to talk about squiggles, and I don't think that Harris is making a lot of decisions based upon.
No, I don't
squiggles.
think so. That is fair enough.
And you know, one thing I do agree with you, Harris, especially on these names that are kind of less followed. The idea of efficient market is just kind of laughable. You know, I had a buddy that went to NCAD, and one time I gave him a trade. I told him about a trade, and he says, "Well, that can't be." And I said, "What do you mean?" And he says, "Well, if it was that good or if it was that great, everyone would do it." And I said, "What? Like, why? Who do you think puts these things in line?" And you're absolutely right on a lot of these names. Nobody cares. There's nobody watching it. There's no analyst getting paid because they're not going to do any corporate finance business. There's no one promoting it. It's small market cap, and nobody cares. And I thought about that with your natural gas name. The reality is that something coming out of bankruptcy, I can't tell you the number of times that I've found the kind of stub coming out of bankruptcy, that is one of the most unloved, unfollowed kind of pieces in Wall Street, and that you should own those almost always, because the reality is that the guys who own it are generally smart, distressed guys that have bought the bonds and have turned into the next equity. And eventually, the fundamentals catch up, and the reason that they own it is because it was cheap, and that eventually it does become followed, and there's some corporate finance business, and some analyst picks it up. But for the longest time, they just trade by appointment, and they don't really, they go up and down for no reason at all, but nobody cares.
So going back to the Sandridge, I called a good friend of mine who I thought would be kind of excited by the idea. Look, you could buy your shares at 8 and Carl Icahn paid 17. When else do you get to buy from, one of the smartest guys alive at half what he paid? And I called a friend up and said, I'm looking at this, and his first words are, "Fuck Tom Ward." I go, "What?" He goes, "That guy stole so much money from my fund. Fuck him." And I go, "Well, he's not there anymore." And he goes, "Good, fuck him," and hung up the phone. He didn't want to think about it. He just was so mad.
Yeah, he's so disgusted by it that he just won't even look at it.
Yeah, he just didn't even want to hear the rest of what I had to say. I think that happened to. Look, the guy set $12 billion on fire. That's an impressive accomplishment. But you have in some companies like this.
Yeah, no, I completely agree. You're also, am I right that you were the TDW kind of, was that the name like Tidewater? Is that one of the names I got from you? I can't remember if that was one of yours or not.
Yeah.
So what are you thinking there?
So I was in that. I don't have any position right now. I exited for small loss, and my thinking at the time was that it's post-restructuring bankruptcy. You're buying a bunch of equipment for a huge discount to replacement cost. No one's going to be replacing equipment because, there's a glut of equipment. So Tidewater is always going to have the youngest fleet. Even as their fleet ages, everyone else is aging at the same rate, which is 1 year every year. And so you'd have basically the largest fleet, the youngest fleet, the best balance sheet, and eventually there's going to be demand for these boats. And that offshore drilling is going to come back because, offshore drilling is actually quite a bit more economic than shale. The problem right now is that shale is kind of like the tech stock, and offshore drilling is like the value. And all these guys in the oil capital expenditure department, or whatever you want to call it, they're super excited about spending money on shale, and they're not excited about offshore. And I don't know why this is, but it's cyclical, and it's probably going to last longer than I thought it was going to last. And you do have this problem where in the 60s, maybe low 70s, they turn on a lot of shale, and it gluts the market. And these oil guys are of this view that you need $70 oil for offshore to work. So it's kind of like this out-of-the-money call option in some ways. And I really do think offshore comes back. It's a third of world production. It's needed. There's decline curves everywhere, but it hasn't come back yet. And this recent shakeout, we just saw our oil go into the 40s. It's probably pushed that back by 2 more years. And I just looked around and decided it's too hard of a play. But going back to the original thing I talked about at the beginning of the segment, I look for situations where if I get it wrong, I don't lose much money. I didn't lose much money on Tidewater. I lost about 15%, which, it's kind of upsetting, I guess, to lose money. But given what the potential upside was, it's not super upsetting. And when you look at situations where your whole book is a bunch of call options where you might lose 10 or 15% if you're wrong, and if you're right, you're going to make 5 to 10 or 15 times your money. You're going to have a few each year that go right, and that offsets the mistakes, as long as you don't have any complete washouts. So anyway, I booked the Tidewater, and I switched that into Antero, which is another nat gas play in Sandridge, just on the view that if these guys really aren't going to be drilling much more shale, and I do think the rate of shale growth slows, my thinking previously was that then the slack would be made up with offshore. Now I think it's an even easier play to be made, where if they drill less oil and the slack gets made up in offshore, then nat gas gets produced less, and nat gas goes crazy because there's huge increases in demand for nat gas.
Right. So listen, the other thing is, I know you do a lot of traveling, and you're really a real tourist, not just like me, like a macro tourist. And I was wondering, if you have any insights about what you think's happening in the world economy, or some kind of unique perspectives that that most people aren't kind of privy to. Like I know you go to Mongolia, and you were mentioning that you're off to Russia, and just kind of any sorts of macro kind of views on the world that you have recently.
I honestly don't have a giant view, which is troubling. I think we're on the Federal Reserve standard, where if central banks print money and stimulate, things go up. If central banks don't print money and stimulate, things go down. And you never know which side of the bed these central bankers wake up on. But because they're kind of Pavlovian and like applause from their constituencies, they tend to be on the side of printing money. And so I would tend to think that if things fall off, they stimulate. If things don't fall off, they stop stimulating a bit. You're sort of range bound in the global economy, and it's just a giant muddle forward. I know there's, debt overhangs and all this stuff people are worried about or concerned about, but I just think it's a giant muddle. And I put a lot more energy into global macro a few years back, and I mean, that's your world, and I think you do a great job with it. And I don't know, when you look at these smaller companies I'm involved in, if global macro goes bad, they get hit harder than anything else. If global macro is good, they go up, maybe they don't. But if you're just going to buy a good business, you don't have to think too much about it. And a lot of things I'm in, they're kind of devoid from the global macro view. I mean, Scorpio is going to work no matter what if IMO actually gets implemented. I don't have to think too hard about it. Carl Icahn's going to figure out how to unlock the value in Sandridge, because that's what he's done for, 50 years before I was born. That's probably what he'll be doing after I'm retired. And he's going to make more money for himself. So, I don't have to think too hard. I see the value, and I know he's going to figure it out.
So
I think your line about buying something at half the price that Carl Icahn paid is a great line. Like that is terrific. I saw something the other day about if you adjusted for the returns, that Carl Icahn has actually outperformed Warren Buffett. I don't know if that's true or not, and it's difficult because you have to remember Warren Buffett is dealing with a float on his kind of his insurance company, and so you have to kind of take out the leverage and you have to kind of back it out. But there's no doubt that Carl Icahn has managed to make
he's a legend,
get right up there.
But I wanted to ask you, Harris, I wanted to circle back because your tales from the trading desk was just great. Just talking about European banking. Well, you were specifically talking Cyprus and Greece. But, another country in Europe that has a lot of contentious thing in terms of their banking is Italy. And, I've read some stuff. I didn't, it's none of my own research, but that there's, obviously all this non-performing loans sitting on these Italian banks. And that theoretically they could all be bankrupt if they realized all of this. Do you have any opinions on Italian banks? Any insights there?
I'm not going to say I'm an expert on Italian banks. I tend to think that all the banks globally are insolvent. And that's the good banks, the bad banks, the really bad banks. You know, when you take interest rates below what the normal threshold should be, and you kind of hold them down for a decade, you build up all these wacky imbalances. And I don't know how long central banks will hold interest rates at a suppressed rate for, but at some point they will go to what the market says is the correct rate. That's just the history of finance. When you try to intervene, eventually the market is always bigger than you. And when that happens, I assume that a lot of things were done really stupidly based on the idea that central bankers would hold rates down forever. And when that happens, I expect NPLs to explode. I expect collateral values to collapse. I expect very bad things to happen. And, you know, I think what's happening in Cyprus and Greece is a good learning experience, even if I don't invest anything, for just what can happen and how fast it can go from really, really good to really, really bad. I mean, the Greeks have been trying for almost a decade to figure out this mess, and they're still not much further ahead than they were when they started.
Right. Right.
Okay, well, you know what? It's getting late there in Cyprus, so we'll let you go to bed. I just want to say thanks again, Harris. It's been a lot of fun. We really appreciate
thank you, Harris,
taking the time out to speak with us.
Yeah, sure. Thanks for inviting me.
All right. Thanks a lot.
Thanks, guys.